So officially, welcome to day 3 of the Professional Trader Advanced course. We've already talked about the current status of the market and what the presidential speech meant and the CPI numbers. Instead of doing live trading so far, we've done a little practice trading. We'll get to doing some live a little later in the afternoon. And so now I'd like to talk to you about the thing that we've been using and talking about all week long, Fibonacci, okay? Fibonacci is a nickname for Leonardo Pisano Bonaccio, okay? And Fibonacci simply means son of the Bonaccio clan. He was a mathematician in the 1100s and 1200s, and he noted a lot of interesting things and did a lot of different mathematical studies. He had gone back and looked at Pythagoras and Euclid and looked at how they derived their golden ratio, the 3 to 5, okay? He also read a lot about them, and he started noticing things in nature that kind of fit the golden ratio numbers, these different percentages. And he started off with, under ideal circumstances, how fast can rabbits reproduce? Well, most of us would go, well, 2, 4, 6, 8, 12, 16, 32, 64. We would kind of mentally double their numbers, okay? But that's not what happened. Again, he completed this particular book in 1202. He saw the Greek golden section in many different places. We'll get back to the rabbits in here in just a second. An interesting thing, it's just, there are things that vibrate true in human beings for some reason. And if you look at a picture, if we look at the picture on the wall over here, as we look at it, it seems appealing to us. And one of the reasons is because the horizon isn't at the 50% level. It's at 38%. 38.2 low, okay? Had it been at 61 high, it would give us a different perspective, but it would still be appealing. If you see a child's or an amateur painter's painting, they usually put the horizon dead center, and when you look at it, you don't feel right. It doesn't seem to look correct, okay? Why is that? Well, I don't know. I mean, my bad joke is that God is Italian. Okay, and that's why Fibonacci works. But Fibonacci also noticed some other things, already. The men of the time in the Mediterranean era, they're from wrist to wrist. That distance was usually about 61.8% of their total body height. The lowest branches on the olive trees were 61.8% of the total tree height, already. The Greeks noticed that 38% of the human body was above the belly button, and 61% was below the belly button. You know, and people start scratching their heads. It even gets into, if you get into the Fibonacci a lot, the Fibonacci numbers show up in your hand, in your body structure. They show up in seashells, in flowers, in music, in art, and certainly the financial arenas. But back to the rabbits. What we found out is that first off, you have to know something about rabbits. Rabbits can't reproduce in the first month because the female has not come in season, has not matured enough. So one set does not beget another set. So the first pair is also the second pair. So you have the first two numbers, 1, 1, okay? Then it starts to get out. That one pair produces yet a second pair, okay? And then the two pair produce a third pair because the second pair hasn't come into maturity yet. And under ideal conditions, we start to see at the bottom here, 1, 1, 2, 3, 5, 8, 13, 21, 34, and it starts to build up very quickly from there. Ready? Now, Fibonacci, he looked at this and he started saying, well, that's really interesting how they did reproduce, and I understand the biology, that it didn't just go 2, 4, 6, 8, but he also started noticing that the numbers were sequentially additive. So 1 plus 1 equal 2, 1 plus 2 equaled 3, 3 plus 2 equaled 5, 5 plus 3, 8, 8 plus 5, 15, 13, etc. Okay? He then wanted to find out, what could we use? Are there any ratios in here? Well, by this time, of course, the Greeks had defined pi. And somebody will always correct me, what is it, 31417, right? 3.1417 or 18? 141527. See, somebody always gets me. That's why I did not do well in geometry or whatever. That's why I became a trader. I don't have to. I can figure out my teenies though. Anyhow, Fibonacci said, what if we were to take the ratio of two successive numbers? That is, take a number and divide it by the number before it. And we start to see a following series of numbers. Well, we know that pi has now been tested out to 1 million digits, okay? And it's still, the pattern has not repeated. This one is kind of the antithesis. After we start getting up into the larger numbers, the thing constantly repeats, no matter what numbers you divide it by. And you can see it here on the graph where it starts to flatten out to ultimately 1.618. Okay? And once we get above about 13 there and start dividing 21 by 13 and 55 by 34 or 233 by 144, we are on a flat line. Everything always comes out to the same number. Okay? Now, the reciprocal of 61.8 out of 100% is 38.2. Okay, so this starts giving us equidistant numbers in the 100% movement of anything. Of course, what we're going to be talking about is what? Price. Now, it's interesting, Fibonacci didn't do it for us. We started doing it for ourselves. We started looking around and saying, well, what if you divide any of the Fib series numbers with any other number? We start to find a lot of things start turning up. Some of the famous ones that we'll be using in here, in fact, it's not even on the list, you might want to add it down there, is 236, 0.236, 0.382, 0.50, 618. There's another one not shown there that shows up. The antithesis of 23.6 would be 76.4. Okay. Certainly 100%. The next one on that list is really 1.272, if you wanted to add an extra number to it. And then, of course, 1.618. But now we're starting to get way away from any common kind of prices. Where do these guys come from? Well, you can see over here on the right-hand side, we just selectively grabbed numbers out of the Fib sequence and divided them to see what we came up with. And, you know, you can find all sorts of them in there, okay? The ones I just read to you over there on the left, the ones that says we'll use, these guys turn up all the time as support and resistance levels, as turning points in price, as a run and then a retracement, as a run and a continuation, which we call a projection or an extension, okay? And by knowing this, it gives us a logical entry, a logical exit, and a logical goal, okay? Now, one of the things I have to tell you about logic, people, logic is an organized way to go wrong, okay? Again, nothing works all of the time. But let's have a quick look at some of these. We use three major methods in Fibonacci, okay? We use retracement, extension, and projection. You guys will like some and you won't like others. I really like retracement. That's mostly what I use, okay? These help me spot strong support and resistance lines, and as I already said, they offer logical targets for profitability. They also, therefore, tell me where I might be able to get out. Now, a retracement is a price move in the opposite direction of a prior trend, okay? We have to develop the cycle. The cycle is the trend, So if I put it up here on the board, and you'll see it on the slides as well, but if we have a move from A to B, a trend, the difference between here is what we call the cycle difference. Okay? So if it moved from $10 to $20, the cycle distance is 10 bucks. Okay? We then look for a retracement, which is a move in the opposite direction. It goes down. Alrighty? And if we look at down here, we can then say it is calculated by measuring the cycle high and low and then multiplying it by a fib ratio. Well, the first fib ratio that we want to use would be probably like 38.2. So if we know the cycle distance is 10 and we multiplied that by 38.382, that gives us what? $3.82, right? Okay? Subtract that from the 20, that should be where this downward cycle stops. Okay? So that would be 16 something, huh? 16, 16, 16, what, 16, 18? 16, 18 would be the target on this guy. It's that simple, okay? Well, let's look at a few of them and we'll, yes sir?
Mike, say for this, how do you know which fib number that the stock is working off or which one that you'd be thinking of?
Well, that's what I'm going to point out. The obvious thing is that we start with the closest one to us. And only do we calculate the next one when the first one is exceeded. So if we started with 38.2, okay, then the next one would be 50. If we got through the 50, then we'd calculate the 61.8. Okay? We don't start with the 61.8. We start with the one closest to us and see if we can achieve goal. So again, let's just go through the quick math on here. The high was 25 and the low was 20. Okay, so 25 minus 20 is a cycle distance of 5. 5 times 38.2 would add up to, or multiply out to 1.91 would be our first retracement. So because this thing was going down, it was going from a high down to a low, then we would add the $1.91 to $20. And we would expect it to go back up to $21.91. So again, in this case, we had 25 high down to 20 low, and then we would add on our $1.91 and look for a 21.91. This would be our first logical target. Okay? So, now,
So you'd be looking, you say you went long here, and then you'd be looking to maybe short it right here. So you'd be looking to reverse it.
yeah, if I got short up in here, okay, and I saw this,
Okay.
if I went beyond the 21.91, I would close my short. If it continues to start to back down, I may add to my short. Okay? Now, what if it goes beyond here? What's going to happen? Well, then we take the cycle distance and we go to example 2. 5 times 50 cents would be 250. You ready? So now 250 plus 20 would bring it up here to $22.50. Now, just like we talked about in gap play, we are now in so-so land. Would you still be short?
Here? No.
Yeah, I mean, we went beyond our 38.2, we're up at the 50%. So now we're in so-so land. Shall we go back short or shall we go long? We don't know. We need further information. So now if it starts to come back down, I might get short again at 21.91. Okay? But if I want it to go long, I've got to see something else happen. How about the third retracement? Now it goes to 5 is the same cycle distance, but we're multiplying it by 0.618. So that would come out to $3.99. So now if we got up here to $23.09, now the thing is starting to show some strength. Alrighty? I am certainly out of my short, but now I'm actually thinking about going long. So effectively between the 61.8 and the 38.2, this is kind of a no trade zone, isn't it? I mean, no open trade zone. It may tell me to get out of my short, but it doesn't tell me to open my long until I get up here. And of course the bottom line down there. Again, remember people, each target only becomes important when the previous target has been reached. So again, what are we going to use them for? Well, we're going to determine certain support and resistance levels. They're going to help us plan our entry, our exit, and our stop losses. They can therefore determine our objectives. I mean, if the thing started at 25, 100% retracement would bring it back to 25, right? Ready? We certainly wouldn't be thinking short at that point. I mean, if it got all the way back up there, that would be a very, very 100% retracement. It seems very strong. So we can also use, what if it got up to 25.05? Well, now we start going out into things like extensions. What if the retracement extended beyond 100%? How far would it likely to be going? And we'll give you those percentages, but right off the top, it's 1.272 would be the next attack area. And so we could calculate that out. Fibonacci, though, also provides us with looks at alternative angles in trend lines, which we call fans. And it also has some interesting work in time. Okay? Now, I'm not going to spend a lot on time. I'll show it to you and stuff. But it's curious. Fibonacci is a very, very curious subject. The last thing we need to really understand is that multiple time frames always do help us. We were just playing our game and we only had 2 days of data to look at. And Van, I think, said, well, I want to look back further. And Mary said, I want to look at the overall market so we can see more support and resistance, see overall trend. Well, we want to do the same thing with Fibonacci. We want to check it. It's really interesting to see that, oh yeah, it retraced up 38.2 to this precise number on this run. But what if that was came up to the same line several times over the course of a week, a course of a month, and a course of a 6 month? All those lines came together at that same place. That's what we call a cluster or a confluence. And that becomes a very, very powerful number. Okay? That's something we always want to know about. So let's have a quick look at some of these. Okay, as we look up here at the screen, here's Applied Materials on September 3rd of 2002. We're on a 10-minute, 10-day, okay? A 10-minute, 1 day, excuse me. And you can see that the thing started out real nice and high. It formed a real flat top in here, okay? And started breaking down. Once it started breaking down, I was able to calculate the high of the day so far at $13.17. Through the first half of the morning, the thing fell down and formed a support line down here at around 12.23. So now we have our high to low, and therefore we can do our cycle distance. We would subtract the low from the high, which is a differential of 95 cents. We then would add or multiply the 95 cents by our first fib number, 38.2. Okay? That gives us, call it 36 cents. We add the 36 cents to the low of the day. Okay? This is what we expect for the retracement. And it would be calculated out of 12.59. Now, I did all this by hand. Okay? The computer is ultimately going to do this work for you, but I did this all by hand so you understand the process. Now, it's curious that as this thing bounces up off here, you can see right here how the high of this bar, and we're on a 10-minute, for 10 minutes, that was resistance. It backed off, and then the next bar opened here and closed here. The 12.59 perfectly bisected the next 10 minutes. Then it starts getting a little out. It went above it, came back down below it. But then start noticing your opening and closes. I mean, the thing is opening at 12.57 and closing at 12.60, okay, opening at 1257 and closing at 1260. This one's a little lower, but do you see what I'm saying is that it's not perfect, but plus or minus a couple of pennies on either side of what we calculated to be is right where the majority of the trades are taking place. Okay? Again, don't ask me why. I can't answer that. Now that was a downtrend. Here's an uptrend. Okay? And again, this is different stock, same day, September 3rd, 02. Again, we're on a 10-minute one day. The only reason I chose 10 minutes, guys, is so that the bars were really separated and nice and clear for you, okay? The cycle low was 42.42. That's where it opened up. It ran up and made a high of 44.05 and started going off. As soon as I started to see this was the highest high and we started getting lower highs, then I started doing my calculations. Cycle distance was the differential between these, and it turned out to be $1.63. Again, I go through the same litany. $1.63 times the 38.2 gives me 62 cents. The only difference here is last time I added it to the bottom, now I'm going to subtract it from the top. So 45.05 minus my 62 cents is a suggested support at about 43.43. Again, I drew this by hand, and you guys can see that as the price falls, this bar right here closes at 43.42. This one opens at 43.43 and closes at 43.42. This one opens and closes at 43.42. This one opens at 43.43 and starts moving higher. There's a little bit of a retracement, and then it's off to the races. What did this describe? The thing moved up, it retraced to a place of strength. Remember, we expected it to come back to the 38.2 and then go higher, and it did. So Paul's question earlier is, well, what does this mean to me? What do I do? Well, I was clever enough for some reason to buy this here. And the thing comes down, and I start getting nervous as it bounces along my 38.2. But as soon as it starts to move away from my 38.2, I feel warm and fuzzy again because I know my stock has strength in it. So now could I add to my position? Yes. Okay. What if this thing didn't hit stop right at 43.43? Some of these bars are lower. Well, I bought it down here at 43 and I got out at 43.40 or 43.30 because it broke the line. But once it comes back up and retests and starts to move up, I can buy right back in here again as a new position with a modicum of confidence. Ready? And boom, 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 off to the races we go. As I said, I did all that for you guys manually. You don't have to do it. You're lucky enough, you just click on the little icon, point where you want, drag it to the other end, and drop it, okay? And it puts in all the numbers for you. And that's exactly what we did. Here we have ASML, 10-minute one day. And in this particular case, I wasn't trying to show you a retracement or anything. I just wanted to give you an idea of how interesting Fibonacci works. So I merely took the highest part of the day to the lowest part of the day and let the lines draw in and see what we find, okay? And it is curious, okay? The mathematics put in these other lines in here, and you can see where it falls, great big shot down for 10 minutes and stops right at the fib 50% line. The next candle opens at the same price and goes up and stops right at the 61.8 line. Well, why didn't it stop at the 63 line? Why didn't it stop at the 59 line? I don't know. But I know where it did, what it did do. It then falls and stops right down here at the 23.6 and zigzags back and forth for 30, 40 minutes between the 23.6 and the 38.2. Weird stuff. Again, it went all the way down, it popped above the 38.2 and sat on it for 20 minutes. Didn't go up in here in the middle, it sat on it, okay? It then fell, a little bit of a hesitation right here at the 23.6. We know it hit the bottom. when it comes up, this one stops right on the 23.6, and the next one opens on the 23.6. It makes a run, doesn't quite reach the 38.2, comes back, comes up, hits this one, sits on this one, hits on this one. It's not perfect, people, but it is a little weird. It's scary weird, okay? Again, here's over multiple days of time frame. In intraday, we're on a 5-minute chart with about 5-6 days up. And again, we're not trying to make any trade plan here. We're just looking at it and marveling at its weirdness, okay? We simply took the low and pulled it to the current high and see what happens with price. And you can see that in here how the price moved right along a fib line as support and as resistance, support as resistance. It finally breaks it, comes right back down to support, moves up, hits this line, comes down, sits on top of this line, and then later, a couple days later, comes back and falls and finds support right along this fib line. All right. Well, a lot of people are starting to learn about fib, and as more people use them, and more people believe in fib, obviously the more self-fulfilling it becomes. And therefore, going forward, this is even going to get better. Okay? Questions so far?
Because they're going to stop it.
Yeah, obviously, as you go out and tell your friends about it, they're going to think about it, and they're going to tell friends about it, and more and more people start to see it, and therefore the price does stop there. Okay, now here's the same chart. Last time we drew from here to the high and let the things fall. One of the most difficult, nothing comes easy in trading, people. Okay? The difficulty with fib is deciding what is a logical run. Where is that cycle? Where does it move from, and where does that end at? Okay? Well, in this particular case, I didn't draw this one of the instructors drew this one. He sees this movement all the way up through here to this high as a continuous run, this being the significant break. Alrighty? And so now he's looking at the internals in here from here to here. Okay? Again, you start to see some of the same things we saw in the bigger picture. A trapping of support and resistance between a couple fib numbers. Alrighty? But interestingly enough, even though we're measuring from here to here, several days later, we find perfect support right along this fib line. Strange but true, guys. Strange but true. Alrighty? And again, you can see just how it comes down, sits on it, comes back, hits its head on it, comes down and sits on it, stops there, and then breaks through. Okay? Now, Fibonacci does move along natural support and resistance lines, okay? Or maybe I could say natural support and resistance lines find fib levels, okay? Again, here we took on 324, we drew our fib from the high all the way down to the low, and it put in these numbers, okay? Interestingly enough, if we were to take these lines and look backward, we find that they are logical support and resistance levels. Here we see at right around the 75, the 50% line, we find it's picking up 2 or 3 tops in here, okay? We go down to the next one. Here we find support here and resistance over in here. So if we look back in time, we can also see that these are logical lines we might have drawn anyway. Okay? Now the question is what's the question up here? Will it stop and reverse? Well, what if this thing moves all the way back up to the 50% line or the 61.8? Do you think it's going to come back down?
No.
Well, at the 50%, it's so-so, okay? But it's starting to hit this resistance line in here, okay? And that may turn it back down. It may as what might reverse, okay? But is not this one even a stronger resistance? As you go up the ladder, R1, R2, R3, R4, are your resistances becoming harder to break? Yes, okay? On the other hand, the thing has fallen so far, if it got back up to 61.8, it's shown some pretty good strength. Okay? But again, you start to reach that what? Immovable object and irresistible force. It's got a lot of strength, but it's hitting the strongest of the resistance lines. Okay, now here's a different shot. Okay? And again, here we're starting to see some weakness. We pulled down from the high to the low, okay, and we let our lines fall in. This is an index, isn't it? Yeah, this is the S&P 500. The 500 recovered up to the 38.2 and made a small double top. Well, is that a trend reversal for an uptrend? Yeah. And we're hitting, if it's less 38% or less, then it's said to be Fibonacci weak as well, that we've learned from our gap work, right? So where do we get short? Well, perhaps we put in a small internal uptrend line, and the moment it fails the 38.2 and breaks that, we could get short right in here. Now, it's a conservative short. Well, Mike, we could have gotten short right here after I saw the double top. Yeah, absolutely we could have. But maybe we went a little bit more, so maybe we put in a tight little uptrend line and say we get short right here. What's going to be our first goal? The low of the day. Okay, this thing's probably going to go zoom back down. Anybody see any pioneers forming right here? Now we also have extensions, okay? Fibonacci extension. An extension is simply bigger than 100% retracement. And we're kind of got one here on the board almost already, but let's clean it up. Price came down and it retraced. But what if it retraces beyond 100%? Okay, well that's what we call an extension. It goes up here. And can we calculate where it should go? And the answer to that, of course, is yes. The two most commonly used extensions are 1.272 and a fairly fabulous 1.618. Okay, so how do we do that? Well, we get our cycle distance, okay, which is the move from here to here, and we multiply it by 1.27. Let's make it easy. This is 20, this is 10. We have a cycle distance of 10. Okay, so then we would say 10 times the first fib is 1.272 or 1272. 1272 plus 10 would be 2272. Oops, 2272. There we go. So it has now extended more than 100% beyond the 20 by $2.72. Everybody with me on that? And we could do the same thing with, if it got to here, we'd then go back and say 1.618 times 10, $16.80 plus 10. We'd be looking at, gosh, math majors, 26,880. What am I doing? 2618, right? Can't even multiply by tens. I guess I'm getting tired, guys. So 2618 would be the next one up. Well, guys, it was going down. It actually went down 10 points. The question is what is the reality? Can it really go up 16 points? Probably not. It can, but I mean, this is kind of exotic, is what I'm trying to say. This is the one we'd really look for. If I went long above the 20, my target would be 2272, not 26. I wouldn't be holding hope that long. Okay, so again, we only use the second extension if the first one is exceeded. Okay, most of the charting platforms do have automated extensions on them. Again, here we see the fall, a retracement. Okay, and how far, if this thing goes all the way up here, how far can it come down? Well, in this one we calculated the 1.272 extension to be 857.35, and as you guys can see, it fell to 858. Close enough for government work. Okay, it went right through the 100% line and stopped right there, pretty much right on our line. Not bad, not bad. Now again, this is hand calculated. We'll show you some with the machine here in a moment. Questions so far? Okay, I already mentioned this, but let's go back into it in a little bit more detail. The most important thing is not just finding a given price line. On 1 point data, just one fib pull, yeah, that's very interesting. It was curious how accurately those things line up. But what if we did it over time and we kept coming up with the same number? That's when it really starts to make some magic. That's when you really start to have some faith that this is my line of demarcation, either to buy or to sell short, okay? We want to look for these overlaps because they're obviously going to be very strong and price will almost always turn at these places. Now, I know this is not the world's greatest coloration, but we've pulled 3 fibs in here. You ready? And can you guys see the gray line? There's blue, red, and there's kind of a whitish gray line in there. And as we pull the 3 over the different courses in here, and this is over a year, you ready? You can see down here we have a 38% line in gray, but it's only one of it. But does it pick up these significant tops in here? Yeah. But what about here where we have 1, 2, 3, all basically at the same price? Well, gosh, Mike, it doesn't look like anything's going on there. Yeah, but if you go back a couple of years, it's basically that bottom there. And if you went back a couple of years, there's probably a couple of tops and a couple of major bottoms in that because there's 3 of them there, okay? Now these guys are a little bit more spread out, but certainly you can see up at this one here, here we have the gray and the blue one right on top of each other, okay? And what is it picking up? This top here, this low here, this little low, this one here, these 2 tops there, and a couple of years ago, that bottom over there. So by looking at it on different time frames, you can start to see additives, and where they start to cluster, those are going to be very, very important price areas. A lot of times they'll hit right on. And I think the next slide we have a couple that you can't even see the other lines. Okay, now here's what we actually did. The first one is we're only pulling 2 days. We're going from 8/22 to 8/26 here. It was over a weekend. We went from the high to the low, and we drew in a couple of lines. Alrighty? And we actually, the only one showing is this guy right here picking up these tops. And that's just one line, okay? We then went out and we drew from the same high, but we took it out here to the 28th and picked up this low down in here. So now we had this line, this line, this line, this line, this line, and this line. Again, you can start to see a couple of them getting kind of close. Alrighty? And finally, on the same chart, we started at 8/22 and took it to 9/6. Actually, we picked up the lows on 9/5 because they weren't the lowest lows in 9/6. Okay? And right here, people, there's actually 3 lines within 1 or 2 pennies of each other. Okay? And what does that describe? Well, yeah, we're going from here to here, but man, we pick up the resistance on this day perfectly, okay? We go back, we pick up the support right there, pretty much the center of the gap of that day. And that's because there's 3 different fib lines right all in there. So you can see they can really start to really overlap. The other one showed a little bit of spacing, but here we're on a 10-minute and a 10-day chart, okay? And man, look how close these guys are. What's the difference? 1750 versus 1743. That's a 7-cent gap between those 2 lines. Not much. Not much at all. Another very interesting feature about Fibonacci is Fibonacci timelines. Now, this is not something we really use a lot in trading, but again, because it's such a fascinating subject, I wanted to spend just a couple minutes with it. The Fibonacci timelines are strictly just the fib numbers 1, 1, 2, 3, 5, 8, 13, etc., all the way up, okay? And they're spread out over a logical thing depending on what your chart's at. So if we have a 5-minute, well then the first two lines are 5-minute, 5-minute, and then 5 times 2 would be 10 minutes, and so on, and then it stretches out here. Now, what we did is we pulled a high-low on our fib, okay, and we find that on the Fibonacci retracement, it retraces back up to the 38% retracement of this trend is right here, which, interestingly enough, occurs right on one of the fib lines. And as you look across, they're not all perfect, but there are some interesting things. You can see right where this price breaks is on a fib line. Right where this one takes off is on a fib line. We already noted this one where it was not only the 38 retracement, but eventual breakdown. Here, the fib line misses the breakdown by a little bit. Here, it kind of hits right on it, but there's no fib line for this. Guys, I'll be honest with you. I don't know how to use this to any really great accuracy, okay? Again, I'm presenting it to you more or less as a curiosity, alrighty? We do have this on the platform, and before we completely get away from fib, we'll go out and play with a couple of these on the platform so you can see them in action. Another feature that we have are Fibonacci fans, and again, they're based on his ratios, okay? And perhaps we draw a trend line that we see from here up through in here, okay? Where would the next likely Fibonacci place his trend lines? And we have 3 choices. Well, by drawing up through this one and extending it off into time, it immediately throws these guys out. Interestingly enough, the very first one finds support right here and here. Huh. You know, now these two, obviously prices in around them, but it is amazing. Like I say, I'll show you several examples of this on the screen. And what is another probable trend line? You know, you go, well, I'm going to connect these 2 little dots right here, just here and here, and then I'm going to shoot it out into the future. What, 1, 2, 3, 4, 5, 6, 7 days later, it finds it right on a predicted Fibonacci trend line? Very strange stuff. Okay, we've talked about retracements. We talked a little bit about extensions. There are also projections, okay? Now, some people like these, some people don't. We'll go through them. There's 3 different price targets, what we call the COP, the OP, and the XOP. Don't worry, I'll define them for you. Again, for each one, we need our cycle distance, a retracement, and then we're going to project from that retracement, low or high, okay? The most reliable projection ratios are the 618, the 100%, and the 1.618. So this is what we're going to do the multiplication with, huh? Let's have a look at a couple and you'll get an idea of exactly what I'm talking about. First off, their definitions, okay? The COP is the contracted objective point. This is the one that's closest to us and is the most logical to take profit at, okay? And it is the 618 times the cycle distance plus or minus the retracement, okay? So if we have a move up and the retracement back, what we're going to do is project. The first one will be the COP, okay, which will be 38% of this distance here added on to the retracement, okay? And then if we go down to the next one, which is called the OP, or objective point, then it's 100% times the cycle distance plus or minus the retracement. So then we would go a little bit further for the OP, and finally the XOP, or extended one, which would be 1.618 plus or minus. If it's in a downtrend, you do go the other way, huh? So if we're doing this, it would be this, and then we would extend down like this. Everybody got it? That's the concept.
XOP, what is OP?
Objective point. And that's in between the two of them. It's just 3 logical numbers that we came up with to either take profits or say it's a get out of town time, whatever. Okay, so again, if we're going to set this thing up, we see that A starts the move, okay, down here to B, the highest part, and retraces to C. If we put in the numbers 10, 20, and 17, we can do our calculation, alrighty? So what we're going to do is we're going to take the first fib ratio, which is 618, alrighty? 618 times 10 would be $6.18. We would then add that to our 17 at C. So 618 plus 17 would be 2318. Okay? Again, the next one is real easy math for you. We were going to use 100%. So 10 times 1 is 10. 10 plus 17 would be an objective point of 27. And finally, if we took the third Fibonacci projection number, extension number, that would be 1.618. So we go $16.18 plus 17, giving us 33.18. Now, if we look at the next shot, we'll be able to see the actual math. Okay. Now, here's the first projection. Again, we're going to be using the fib ratio of 0.618. Cycle distance again is A minus B, gives us 10. The retrace to 17. So we do the mathematics. 10 times 618 is $6.18 plus the 17. So our first target would be 23.18. What does this mean to us? Okay, so somewhere along in here, we bought this stock. The thing came up and it retraced to C less than 38%. It started moving back up. We bought more of it. We bought 500 shares here. We bought another 500 shares. We're carrying 1,000. Where should we take the money off? What should be our next logical goal? Well, we could maybe look back at our chart and find a resistance line. But does not Fibonacci provide us with a calculated resistance line? Yes, and that's what this is all about. Our first projection would be 23.18. So if we got up here to 23.18, I'd be willing to take at least 500 shares off, okay? And if I look at the rest of the market and it's starting to weaken, maybe I'm going to take all 1,000 off. What if I only took 500 off? Well, maybe I can shoot for the next one, the objective point. Okay, now this is getting pretty exotic though, guys, because the thing's only made a $10 move once, and now we're going to ask it to make, you know, another $10 move twice. But again, we already got $23.18 worth of profit in our pocket here, and we're still carrying 500 shares. What's the next logical target? 27. This also happened, probably we coordinate with a chart. It's a round number. There may be some other, there's the 52-week high. And again, these things would help us make a decision. Is that the end of the trade? And I don't think I even have the third projection up here, but again, the next one would be what? 33.18, which would even be further out. Does everybody understand how this works? What about Fibonacci today? Okay, here we are. You know, 800 years later, Fibonacci was 1202 or whatever, and here we are in the 2000s, okay? What happened? What happened? Well, nobody really noticed anything about Fibonacci until Leonardo da Vinci. If you guys ever get a chance to read the Da Vinci Code, absolutely fascinating book. He talks about Fibonacci like crazy. By the way, just as a curiosity, another little fib fact, if you will, one of the reasons that people love the Mona Lisa, which was painted by Da Vinci, is that when Da Vinci developed the face, he did it all perfectly based on Fibonacci ratios. So even though she's not the most beautiful woman in the world, she is one of the most appealing, okay, because it's just, it rings something inside of us because it's all fib ratio. Isn't that weird? Okay.
I prefer Michelle Pfeiffer over that one. They say she's Fib, her face is fib.
Michelle Pfeiffer is
Yeah,
fib
so I heard.
perfect or
couple
close?
here. Yeah, her face, her nose, everything is
Huh.
fib.
That's funny. She's reasonably attractive, but certainly not great looking.
But she's fibbing.
She's fibbing. Ha ha, I see. Only her and her plastic surgeon know. Okay. There was a guy in the 1920s, Ralph Nelson Elliott, okay, who created Elliott wave theory. Elliott looked at Charles Dow's Dow theory and started noticing that there were certain cycles in it. And so he did a little bit of work on the Dow theory and created Elliott wave. And the Elliott wave uses Fibonacci retracement and projections as their linchpins, as their underpinnings of their mathematics, okay? We talked briefly about this. The Elliott wave theory says that primary waves tend to travel in 5 waves, 3 forwards and 2 backwards. And then we get a counter trend in 3 moves, i.e. 2 forwards and 1 backwards. Devout Elliott wavists use Fibonacci ratios or retracement levels to define how far they expect each wave to advance and to travel. The question is this a self-fulfilling prophecy? If I'm looking for a wave and I expect it to only go back 38% before I buy it again, and I buy it when it hits 38%, is it going to go up again? Yeah. Okay. So this is where you have to worry about some of this stuff. Let's take a quick look at Elliott wave here. Again, as I said, Elliott wave is an outgrowth of Charles Dow's Dow theory. The Fibonacci numbers are the mathematical foundation of wave theory. But people, I want you to remember, you'll see a lot of this about Elliott waves. Elliott wave is a very, very interesting and very academic analysis of the markets. But there's an awful lot of market timing involved in it. And therefore, you will find an entire spectrum of opinion. I'm not saying that Elliott wave theory is bad. I'm saying that it is very, very advanced thought. And before you guys start worrying about it, let's see if we can do some simple trade plans. Let's see if we can obey a trend line first, okay? Keep it in the back of your mind. It's very interesting. But you'll find that if I bring in 2 Elliott wavists in here and put up one chart and drop a switchblade on the floor, only one will come out of the room alive. They will kill each other arguing, okay, which wave they're in. Elliott concluded that the movement of the stock market could be predicted by observing and identifying repetitive patterns of waves. In fact, much like Fibonacci, Elliott believed that all of man's activities, not just the market, were influenced by these identifiable series of waves. So we saw Fibonacci found out wrist, trees, mud puddles, flowers, rabbits, all these things were in our lives, and they all had these kind of numbers and ratios in them. Well, that's exactly what Elliott's saying. Not only do the markets tend to move up in 5 thrusts or 3 thrusts and 5 moves, but so do our music, so does our architecture, so does our religious beliefs and stuff. They all have these different cycles in them. Now, here is a stylized chart of Apple. It's the actual prices, okay, but all the wrinkles have been taken out of it. And Elliott says that we expect the thing to move up 5 and down 3. So it's 3 thrusts up, 1, 2, and 3 in 5 moves. 1, 2, 3, 4, 5, okay? Then it's going to retrace, okay? It's going to retrace 2 times in 3 moves. 1, 2, 3. You ready? Each of these retracements are going to be based on Fibonacci numbers. Now you look at this, and this chart goes, man, this looks really interesting. Okay, and if I could start saying, well, if this is a 38% and this is a projection of 1.272 or an extension, okay, and I could figure out what the overall retracement down to here is, that I could come up with a mathematical theory on this. That's cool. The problem is that you have subwaves, and it starts to look like this, okay? So now we have, if you'll follow along with me on the left, we have thrust 1 to 2, 2 to 3, 3 to 4, and 4 to 5, with sub 1 to sub 2 to sub 3 to sub 4 to sub 5 to sub 1 to sub 2 to sub 3 to sub 4 to sub 5. So now all you have to do is to say, well, is this really a 3 or is this a sub 5? Or does it matter? Okay? And this is, of course, where I start to lose interest. People, I believe that the most important thing in trading is the KISS principle. Keep it simple, Sam. Okay? If you make my life too complex, I have too many things to worry about. I'd rather focus on the market and see what price is doing than worrying about which cycle I'm in. Okay? But there are a lot of people out there who subscribe and believe and proselytize Elliott wave theory as the answer. I can tell you it's one of the answers. It just happens to be a difficult one for me.